Thursday, September 22nd, 2022, Monaco 64, home of alternative economics and contrarian views. We're going to look at the Fed, of course, today. I think it's necessary to do so, even though I rather not. I'd rather we didn't have central banks, no Fed, no Bank of England, no ECB, and that the free market would decide where the price of credit would be, and not have a bunch of guys and gals, I guess, trying to manipulate the market as they do. But I think the markets are starting, and investors are starting to lose faith and confidence in the Fed, and that's what we're going to look at today. Before I start, though, I have seen many comments in the past years and recently about people being concerned when they buy gold, whether it's fake or not. And I always tell people, if you're doing it the first time, if you've never held a gold coin, to go to a reputable dealer. That's the first step. But there is another way to do it, which I didn't know about until a few weeks ago, until one of you guys contacted me, and that's the gold coin balance. And it's not a gold testing machine, which could cost thousands and thousands of dollars. It's just this here, and I'm going to go through what it does. So it detects fake gold coins, but only 1 ounce gold coins. For example, here you can put the coins here. So they have a place for 1 ounce Philharmonic gold coins, 1 ounce gold buffaloes, 1 ounce kangaroo, and 1 ounce pandas. So you put the coin here, right? And I'm going to show you in a minute how it works. And on the other side, you've got a place to put 1 ounce eagles and Kruger wrens, as you can see. And then on the sides here, you can test the diameter and the thickness of the coin. So I've got a 2007 gold buffalo, which I actually bought back in 2007 from the US Mint, when the US Mint still allowed people from abroad to buy their gold coins. They don't allow that anymore for some reason. So let's test it then. It's fun here. So the buffalo is here between these two notches. So I'll put the coin here. You see it fits, right? And then for the thickness, it's this little opening here. You put it there and it fits. And now you put the coin in there and it fits. And I'm gonna let you see the picture of it that I took, because it's a bit difficult to show you through the camera. So yes, if you're interested in that, it goes for $25.99 on Amazon, and there'll be a link below in the description. And I think they have a guarantee as well that if you buy a gold coin and you test it, and it's a positive test, but then you find out that the coin is fake, they'll give you the spot price of gold. That's what they say. So with that, let's go back to the Fed. Well, don't know if some of you have seen that I interviewed London Powell from the Sirius Report yesterday. I published the interview yesterday afternoon. You might not have seen it, but we were chatting about things before the interview and after as well. And he sent me this because we're talking about the Fed. It was prior to the Fed decision, end of the FOMC meeting. He said, Fed 12 months ago, and this is what the Fed said 12 months ago, unlikely to raise rates until 2024. We believe a recession is unlikely. Inflation is transitory and not a problem. inflation should fall to 2% in 2022. And I had a word with Paul, and he said, if you or I work for a financial institution and we made these kinds of predictions, we'd be out of a job. And that's true. So let's go through these comments they made a year ago. So they said they were unlikely to be raising rates until 2024. So yesterday, their dot plot chart, which shows where each FOMC member sees rates going forward, indicated that the highest Fed funds target for them would be next year or sometime in, I think 2023 at 4.6%. 2023, right? So here they were a year ago saying they wouldn't start raising rates until 2024. And now here they are a year later saying that they're going to stop raising rates in 2023. It makes no sense whatsoever. And the other thing that I took away from the plot, the dot plot chart, is that they think 4.6% interest rate will be enough to bring inflation, which is being reflected at almost double-digit rates, under control. And yes, he mentions Paul Volcker a lot, the chairman of the Federal Reserve, Jake Powell. But Paul Volcker had to let rates go up to almost 20%. When CPI was around 13-15%. He didn't. So what makes Jay Powell think that, or the FOMC for that matter, think that rates just below 5% are going to bring inflation down from double digits, really, because real CPI, if you calculate it like Paul Volcker, like it was calculated in the Volcker era, is more like 15%. So I think that's what the stock market was concerned about. They thought, I think that was bullish, because that they almost thought that was a pivot. And I thought about that as well. Well, they're telling us the pivot is going to be next year when rates are at 4.6%. But then the stock market turned around and dropped 500 points, I think, the Dow. So it was a really bad day for the stock market. Gold and silver reacted initially, dropping as well. But then they traded massively higher. Gold went up to $16.88. Silver went up to almost $20. Yes, they did finish off from those levels, but they finished up on the day while everything was down, except maybe for longer term bonds, like 10-year notes. But yeah, gold finished up 0.5%, and silver finished up almost 2% after being up 3%. So was that because gold and silver think the Fed's going to pivot? No, because if that was so, the stock market would have rallied as well, and it didn't. So my take on it is that investors, big money, they're starting to lose faith and confidence in the Fed, and it's not surprising. Can you really believe anything they say? Are they really that good in forecasting? I don't think so. I think they're losing control of things, and they're just really saying things that just trying to stop things from unraveling. They even said that there might be a recession next year, but we're already in a recession. We've had 2 consecutive quarters of negative GDP. The Atlanta Fed, again, they lowered their GDP forecast for the third quarter to almost 0. The blue chip forecast that the Atlanta Fed shows is almost at, I think it's at 0, if not negative already. So the Fed is out of its depth, I think. Some people might think it's being done on purpose, but I think they're just brainwashed Keynesians, and they believe in this rubbish. So we know, of course, that 12 people or however many central bankers there are in the FOMC, they can't know where rates should be. They just follow the markets, and I think the markets now are losing faith and confidence, and we can see that in the yield curve. The 2-year note yield is way above 4%. It's been the most inverted since the Volcker era, so things are not great out there. So with that, we're going to quickly look at where the markets are this morning. I think the Bank of England was going to decide on rates this morning. They used to do it at midday, but for some reason they changed it during the pandemic, and now they come out with a decision at 7 a.m. So yeah, they've raised rates by only 50 basis points to 225. Of course, their excuse now is that CPI is going to come down because we have this huge package where the government is going to spend probably 200 billion pounds to lower CPI. But I think they should look at core CPI X food and energy, really, because what the government is doing is borrowing 10% almost of GDP just to get the CPI down, and it's just crazy. So the pounds continue to lose. It seems like one big figure every day. Pretty soon we're going to be at parity with the dollar, and yeah, it's just a reflection of the decline of the British Empire. When the British Empire was around, the pound was as good as gold. It was always, and the dollar was as good as gold. So the exchange rate didn't matter. It was always 4.88 or thereabouts. So it's 8:15 a.m. London time. So yes, yeah, it is frustrating, but if you know about the system and what it's all about, you should be, in my opinion, it's not advice, I'm still doing it, acquiring as much gold and silver as possible, physical. And yesterday I received a few more of these Britannias that I bought last week from Gold Investments. So they're still available. They're still for sale there for now. I saw Robert Kiyosaki said the other day he couldn't get any gold and silver coins. Well, I'm not sure which dealer he's using. But anyway, yeah, they've smashed the paper price again today. I'm sure a lot of these bullion banks, they don't even know, they wouldn't even know what this is if it hit them in the face. They trade paper. So right now we're at 16.58 or 50. Yeah, we're down $15. So it was an encouraging day yesterday, but you can never tell with gold. And I think the Fed is desperate and the bankers are desperate because that's the last line in the sand. As JP Morgan said, gold is money, everything else is credit. So they're desperate to keep people in their credit system. So what do? Well, they try to discourage people from acquiring real money. And I still believe that by acquiring real money right now, you're going to be in a very good position. And I don't think it's going to take that long this time. I think we're near the end game. And I think the European currencies are showing that because they're losing faith and confidence despite raising rates today. The Bank of England, the pound is down another 1/3%. We've hit almost 112.00. So the other encouraging thing I would say is that silver is not confirming these new lows in gold. Silver made a low a few weeks ago below 18, and we're still above 19. So I think silver is pointing to a bottom, I would say, in gold and silver in dollar terms. Of course, in sterling terms, we're almost at 1,500. and we're up about 10% year to date. So it's doing a good job for people living in the UK. And yeah, I know there are a lot of people out there who trade paper gold versus the dollar, and they might be doing well and making paper profits. But one day they're going to be bulldozed like probably traders, paper traders in Venezuela were 4 or 5 years ago. So anyway, the high in gold has been 1680 overnight. Yesterday was 1688. Silver right now is down 20 cents, so down about 1%, just like gold. High has been 1967. Right now we're at 1935. Low has been 1923. The stock market is continuing to move lower. The Dow did break 30,000 overnight. Right now we're down 78 at 30,100. So down a quarter. NASDAQ 100 futures down 0.2%. S&P 500 is down 0.5%. FTSE almost back to 7,000, which is where it was back in the year 2000. So there you go, FTSE. Not a very good store of value. It's down almost 1% this morning at 71.71. Eurostoxx 50 is down 1.5% at 34.40. As I said, sterling is weak again. The euro is unchanged at 98.33. It got hit hard yesterday after the FOMC, just like the pound did. We're at 98.31. The dollar is up over 1% versus the yen. So the yen is continuing to flounder. Dollar's at 145.80. Dollars down slightly versus the Swiss franc at 96.45, and the dollar's up 1/3% versus the yuan at 7.10. The only currency that seems to be fairly steady these days against the dollar, despite the fact that we're being told that Russia is unraveling, they're panicking. Well, this morning, the dollar's at 60.80 versus the ruble, so not going anywhere. It's down actually 1.2% versus the ruble. To the other currencies here, Aussie dollar is down 0.2% at 65.84. The dollar's up 0.5% versus the Canadian dollar, 135.28. And the Kiwi dollar is down 2/3 as well at 58.11. Yeah, and there's talk of dollar index being the highest it is in 20 years or stuff. But 20 years ago, gold was trading at $300, and we're still around 1,700 or 1,650. So it's a distraction, the dollar index, because it measures the fiat dollar against other fiat currencies that are even less appetizing, if you can call them appetizing. So right now, yeah, let's go to the general commodities. WTI crude is down 0.1%, 82.73. Brent crude is down 0.1 at 88.90. High-grade copper is down 0.5% at 344.55. U.S. nat gas is down 1% at 7.73. And quickly look at the Dutch TTF nat gas futures. That's down 1.4% at 187. So yeah, that's what I think the Fed thinks it can do. It can deflate paper markets and commodities, and that there won't be any inflation anymore. And I think they're going to be proven completely wrong, just like they were proven wrong with what they thought was going to happen a year ago in terms of all the indicators that we spoke about. And why do I think the Fed is wrong? Well, because Jay Powell is in denial about what inflation really is. He was asked this question in February of last year in Congress. He was asked, well, this huge growth in M1 and M2 money supply, isn't that inflation? Won't that create inflation? And he said, no, it doesn't really matter. So this is why I think he's going to be wrong. Just look at this M1 chart. There will be consequences to this, and we're seeing them already. And the Fed yesterday, or Jay Powell, I think he said that inflation will go down once everything, all the supply chain and the war is over and everything. He's not looking at all that money and credit that the Fed helped create. So let's finish off looking at the bond market. Well, the bond market is continuing to get hit hard. The 2-year yield is up another 12 basis points, which is a bad thing. It means the price is going down, and it's going to cost a lot more for the U.S. government. Their deficit spending is going to go a lot higher to service this debt. It's at 4.12. The 10-year yield is up 4.4 basis points at 3.55. So it's inverted by almost 60 basis points. This is not good. This is a really bad sign, I would say. Let's look at the UK yield curve. Should be interesting. Yeah, that's really not good either. I feel sorry for people who have their mortgages coming up for renewal in the UK. Right now, the 2-year yield is up another 8 basis points. It's almost at 3.5. It's at 3.44. So, and the 10-year is only up 2.6 at 3.34. So even the UK yield curve is inverting. So there you go. If you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And with that, I wish you all a great rest of the day. Take care. Bye.